It's week 11 of the portfolio simulation, and this looks really good. If you haven't followed us before, we have 3 portfolios. These are just simulations, it's not real money, and this is just to show how vanilla equity is set up and how the payment of the quarterly performance is done. So we have 3 portfolios. One is buy and hold portfolio, one is the let the profits run, and the third one is buy the dip portfolio. So for the buy and hold, we basically bought the securities during 5 weeks, and we just then follow how that portfolio develops. For the let the profits run, we'll look at the weekly performance, and on the weekends we sort of buy and sell. So there we sell everything that went down during the week and we buy what went up. For the last one, for the buy the dip, we're selling 50% of the holdings that went up that week, and then we buy 50% of what went down. And so far we have 5% up on the buy the dip portfolio and also on the buy and hold. The let the profits run is about 0 or 1%. So we're now closing in on the year end, which is a very interesting time for 2 things. We have institutional clients and private banking clients or private individuals that start to think about different things. The private individuals, they look to maximize, or let's say optimize, their tax situation. So you might want to sell some losses to offset the gains to avoid paying tax. And then on the other side you have the institutions where you might have portfolio managers, asset managers that get paid a salary based on the performance. So in this case, now a portfolio that has went up 5% during 2022 is actually quite a good performance. So they might be tempted to sell the position today. And this is maybe something that you could consider if you would now have invested like this, that in the beginning of December already sort of take the money off the table, enjoy Christmas. And it's interesting to see, we have people thinking there's going to be a Christmas rally, which there might be, and but if your salary depends on it, you might not want to take the chance. So I think we'll have a lot of asset managers that will take their money off the table and make sure that they have a nice performance for the year. And for those that haven't met their quota or are in danger of losing their job, they're probably gonna put their money in and hope for a late Christmas rally. So let's see how it goes. The quarter is soon over, and then we'll have the payment, and we'll go through how that is done with vanilla equity. And as mentioned, these are just passive portfolios. With vanilla equity, you get a chance to actively manage your portfolio, and I'm sure you can do better than these. So get your membership at vanillaequity.com. It just costs $5,000. Make sure you're incorporated, and then you get access to $50,000 that you can invest. And yeah, I can't wait to have you on board. So see you next week again for another update of the portfolio simulations. I'm Eric Snell, and visit vanillaequity.com if you're interested in portfolio management.